Hey, yo, it's your boy Lion from is back. Just gonna go through a trade that was a good opportunity that I observed earlier this New York session. And it starts with this right here. I was actually wrong. And I'll show you how I was wrong. I managed to get some profit this session, but it ultimately didn't lead to my take profit while I was still in the trade. So I managed to get partials, but I didn't actually manage to get to my full take profit. And this right here was the resistance, which was actually a good trade. And this is why. You see, obviously, there's a 1 minute order block. Asia session was crazy. So I wasn't big on the trading today at all. I've never seen an Asian session quite like this in a while. So I was really comfortable. If you're wondering what these orange lines are, this one doesn't really matter. This is just half of yesterday's New York session. This one here. So this one doesn't really matter. This is a 30-minute fair value gap. That price was respecting a bit too much for me to just leave it untapped. So I'll show you where it is. Just yesterday, right in there was this fair value gap. And as you imagine, I'm just watching price and it's respecting its fair value gap. So now from here, I'm expecting a drop, but instead they decide to take it up, grab some liquidity, fill in this fair value gap, go above London high to get some official liquidity, go above the daily open price, which is just like the actual open price where gold actually opens, which is 23 New York time, 23 hours New York time. So yeah, this to me was a catalyst that they were using to take price lower, but instead they manipulated it higher, created this order block, and you can see that it is actually an order block, even though price went through it here to grab this liquidity. And why is there an order block? Because if you look through this, this was literally like a 2-minute move. So if you look through it, imagine this doesn't exist. This order block here create the fair value gap, and price is respecting it dearly, and it's dropping further. So the low that this order block made, remember, ignoring this should be the next target. So my logic is coming into the session, I'm looking for entries for this low at least, which is right here. And I'm just going to explain why this 1 minute candle was the resistance. So on the 8-minute, I was right here. Bang. See that? Price has made this fair value gap, made a new low, it's gone below here. And since then, the fair value gap was untouched. So it come back into it. And then my expectation was for price to make this low here and grab this juice. Understand? It's obviously extended because this is replay, but yeah, my take profit was there. But seeing this 1 minute order block, I could have taken a more smoother approach and taken everything out at the order block. Why is that? Well, although there's very tasty liquidity here, this is actually a big liquidity pool itself. As you can see here, this is the London session low. So that in itself, the algorithms use that as a way. This is why it's called the kill zone, because the algorithms actually use that as a way of putting sell stops and buy stops, and people actually use that. You know, people, they think, oh, the price is going below London lows, there should be a sell stop there. So once they put the sell stop there, once they're triggered in, their stop losses will be above highs here. And so what do you think that the manipulative, disgusting banks are going to do? They're going to take price to their stop loss. Unfortunately for them, but fortunately for us, they're giving us their money, right? So bang, this low as well. We're gonna call that juice. There's fairly enough liquidity by the time prices reached here from up here. Understand? There's enough liquidity. This is just the 8-minute order block. I'm aiming for that low. Right? I take something off there, and the rest is I'm waiting for it to get to here. Ultimately, 1722. But bang, that goes up. Make a high here. Come down, fill in this little fair value gap. But it doesn't constitute for a buy just yet. And we'll break that high, bang into the fair value gap again. And me thinking that this is just some resistance, I wasn't really set on it going higher. But this is how it did go higher. This is why it did go higher. Yeah, it's because the high was broken there. And then this fair value gap got filled right there. But it's not your ordinary fair value gap. Right? There's a fair value gap here, but then it's also this little breaker candle. And this was the last up candle before price went to this juice here, which is the green line, which I'm about to change. Before price went to that low, the one that I most recently marked out, that is the last up candle. So we know that they have buys in there that they need to mitigate before going higher. So imagine they just take off their buys once price gets there, and then imagine price just decides to go up because it's like someone's taking their profits, a big giant order that moved the price lower below here. And there was a pairing of orders here. The sell that was in here, imagine them taking profits and then price just reacting off that. That's basically essentially what happens in these candles. Do you understand? But price is algorithmic, so it's all planned, it's all controlled. Why would it come back down here for someone that bought that's in minus? It's because it's planned. It's because the people that are in minus are in control, and the algorithm always gives them a chance to get out and to actually make profit. So yeah, once price comes to 50% of that, coupled with this fair value gap, you could buy it, because also these even lows here, good little bit of juice, which is I say is running, right? The juice is running, so they're going to need to take that above highs as well, and this as well, because remember, they're going to want to take it at least to here. So using that information, we go below the lows, we press buy, we have our stop loss at that low, because it doesn't need to go down below that low until it comes up above here, right? We'd have a little 1 to 2. Understand? And if we go to like high time frame, this is probably the high right there. So we could even say a 1 to 3. But at this stage, once you're so solid and you're so certain that price is going to go up, then yeah, you just choose how much profit you want to take out of it. Understand? Obviously, don't be greedy, and that's how you excel in this. That's how you pass the challenges. That's how you become a consistent trader. It's by managing the human side, right? But that's another topic. So all my life, since I found trading, I've always knew there's a way to put the market into submission, into a chokehold, and put your entry between retail giving the house their money and the house actually taking the retail's money. You can stand in between that, right? So where am I? I am going to put myself right there. I'm going to make it look like me a little bit, light skin. Understand? That's me right there. That's my entry. I'm standing in between the transaction, what's going on. You're not liquidity. You're not saying, oh yeah, this is an order block. This is a fair value gap. I am putting my order right there. You have to be like water. Water is formless. every bottle that it goes into, it takes its shape. Every single bowl it goes into, it takes a shape. No, this is not what happens, right? The pairing of orders has taken place right there, which is why I'm there. You understand? So let's see what happens. This is the cookie cutter, really basic, really stiff trader approach. And this is me. This is the house. This is the whales. This is how they operate. Remember these three elements: breaker, fair value gap, liquidity taken, high broken, high to be. Well, yeah, this liquidity is take profits up there, right? This liquidity stop loss is up there, right? So we're going for that. We're targeting that. They've given us their money here. We want to be able to make it ours by going up here. Bang. Remember, I could even put my stop loss here. Whoops. Don't turn me upside down, boy. So remember, these guys that are losing, that are giving the house their money, giving me their money, they are the ones getting turned upside down. It's giving me a good idea. Not me. They're not like me. They're just idiots. Goofy color, yellow. Their pockets are getting turned upside down. We are shaking all their pockets. We are shaking their pockets. Come on, give me your orders. Give it now. And thing is, by the time it gets above here, they're going to start thinking, yeah, I should start buying. You understand? Remember, I said my stop loss is moving up there. So I'm in, yeah? So now the stiff traders, stop loss has basically just been hit. Right there. Just take that out so you don't get confused. Yeah, remember, I'm standing there. The transaction has taken place at 10:33, 10:34, just after crude oil inventories, usually on a Wednesday. And one more element, we are in this range here. I've just noticed this range as well. We haven't broken out of this 9:30 candle. This 9:30 candle is very important because it took liquidity, and it took liquidity on the upside as well. Very important that we notice that we are in this range, and price is likely to go for the high because we've just taken liquidity, because the high liquidity was taken first, and then the bigger pool of liquidity was taken second, which is the low. So we're going to go back up to the high. This is how people make all these type of shapes in the market on Instagram and wherever they're looking. And they think, oh yeah, this is the market, it does this because it's planned to do this or something. It's not. Liquidity, money, orders, they're all like water. They're all formless. Yeah, you can identify certain type of patterns, but the main one is this. The last up candle before the push down. But let me just stay on topic right now. Yeah, let me stay on topic. Remember, I'm there. I'm looking to take out the people that are selling here. They're gonna have their stop losses at here, at least, possibly here. But it's my choice how much I want to take. So I'm just gonna go for that and that. All right, I'm just gonna go for that. Bang. We were below 50% of this range as well. So it's a discount range, and that's what we like to see. Another very important factor to filter out the bad trades and bad entries. Going down back below discount. But we didn't break this low. In fact, we made even lows. We didn't break this low right here. This thing's a bit annoying. Didn't break that low. Understand? twice. They tried to do it here, didn't break. Tried to do it here, didn't break. You get me? Do you understand where I'm coming from? Very highly probable. This is the market. This is the marketplace. This is why it exists. Choose the setups you want. So now we've gone above the juice. Boom. Profits have been taken. That's why you see this reaction. Right? Initially, it goes below this low. To me, that's not really a break of structure just yet. And by break of structure, I mean a break to continue lower. Now, that's just them taking out possible stop losses. And, you know, the market is fractal, so it will do this on every time frame. Right, we're breaking above this range, which is a good sign that we could continue higher for a little bit. But of course, it needs retracement to take these buy stops out of the game as much as possible, right? But ultimately, this juice and this order block is what's fueling the market. But now this is running, so we're going to see how far low they take it. Remember, this is running. This should be green. But now, taking it above here, so we could make that gray because it's neutralized, right? Coming in to this little candle here. This was the last down candle and little fair value gap right there. This area here, ultimately. You got the last up candle there. Right there, the last up candle before the push into this juice. As you know, the market is fractal, guys. The market is fractal. The odds of me picking this up on a live account is lower than me picking up a higher time frame on like the one I'm displaying right now, because sometimes, you know, it's just too fast. And even if it is fractal, it doesn't mean that this is going to push price to a profit in a way that is even going to account for the dealer spread. Because this is a 1 minute chart. So the smaller it is, the smaller the reaction you're going to get. So we call this the breaker. All right, it's just come down to that. Remember, mitigated, exactly the same thing as here. All right, up, down. All right, here, up, down, up, down, up, return. Delicious. Up, down, up, return. Delicious. Yeah. It's not quite gone above the high, because remember, I was there. So I still want to shake the pocket, these penguins a bit. And there we go. Did say I wanted it this high. Let's see what happens, because we've got the 1.618 pointing really close. And this is an official fib. All right, still resisting, going lower. But ultimately, that is enough. So this is just one example. And this is how you can profit of resistance. I want to be an animal at this, and me making these videos helps me, and you guys watching it helps you, hopefully. You understand? So always track your liquidity. Always make sure that you mark out these candles, because if you want to stay following the chart and not get caught out by thinking this is a reversal, and make sure that you're using the right patterns, using the right candles to buy, using the right candles to sell, putting fibs on the correct low and targeting the correct high, using the right fair value gaps, everything, putting your position where it needs to be, make sure you as a trader taking your responsibility to stand in the right place in between the transaction, right? In between. You're not the transaction. You are standing in between it. You just got to make sure that everything I've said, you apply it and you make it a habit to always show it. Right, this is just one example, one little factual example. 1729 to 33.5, that is about over 45 pips, about 45 pips, just using this fib here. Right, here, in the breaker, the correct entry, 26 to 33, that's 50 pips minimum, right? Because it's actually 27. So there's opportunities always. How long did this take from entry to exit above here? Let's just say above here, worst case scenario. Best case scenario, above here, right? Bang, this candle, 50 minutes. If you can't sit in a profitable trade for 50 minutes, knowing this information that market wants to, that you have the market in a chokehold, you have the market in a submission. That's the hard part of being a trader. And I've struggled with it myself, but I have put in the effort and the work to look for the answer, right? And it's just understanding your competition, shaking the pockets of the penguins, right? Standing in the right place. So if you're standing in the right place and these things line up, liquidity breaker, fair value gap, liquidity taken below 50%. Now you want to target the stop losses, right? You've got the market in a headlock. Why are you worrying? Why are you shaking? You have any questions? Hit me up. Now, help you. I try my best to help explain some stuff to you.